Hi, everyone. I'm Bob Jablonsky. I'm a certified tax resolution specialist. At my firm, Jablonsky Tax Relief, we help taxpayers with all of their tax issues, including tax preparation planning, and our specialty, which is helping taxpayers resolve their IRS problems. Today, I'm going to talk to you about understanding tax penalties and how you can minimize them. A lot of people are coming into my office right now. The IRS has gotten very aggressive as far as collections. And they're saying, well, I have all these penalties. I don't even know what they are. I don't know why they accumulate. Can I just get rid of them? Can I tell the IRS I'll pay my taxes, but I can't pay these penalties? And so let's talk about that very quickly. Unfortunately, the last part I said, could I just tell the IRS to go away with these penalties, remove them? It's not that easy, but let's just talk about the subject overall. The reality is that tax penalties accumulate very quickly, or they can accumulate very quickly. And I often see penalties and interest double the amount due, particularly on older debt. In addition to the penalties that we're going to talk about, IRS interest has continued to increase, just like rates have increased in general. And whereas we used to see interest rates, IRS rates below 3%, they're now at 8%. Which is a tremendous, which means the debt is accruing very, very quickly. We're going to discuss some of the common penalties and how to avoid them. First, I'm going to mention, I touched on interest. The IRS cannot abate interest. It's something that comes up quite often. Interest is statutory, and unless the IRS has made a mistake in calculating interest, they can't just remove interest. Removing a penalty will remove the interest that's related to that penalty, but they can't just remove interest on the tax owed. So what are some of the common tax penalties? Well, failure to file penalty. That's when you file late, FTF it's known as, but it's when you file late, and it's 5% each month or part of a month, up to 25%. So what you're seeing is 5 months later, 25% more if you didn't file an extension and filed late by 5 months, or if you filed an extension and still filed late after that extension due date. There's the failure to pay penalty, FTP, where you're paying late. One of the things I want to mention is when you file an extension, it's an extension to file. There is no extension to pay. Taxes are due on April 15th, whether or not you file an extension. The failure to pay penalty maximizes is the same place as failure to file, 25%, but it accrues much slower. It's only 0.5% per month, as opposed to the 5% per month failure to file penalty. There's also accuracy-related penalties. Typically, we see those come up with audits and reviews, CP 2000 reviews, where there's computer reviews where they're saying there's differences. You didn't put everything on your return. And we'll see those, they're typically 10 to 20%. The failure to deposit, if you are an employer, payroll taxes up to 15% for failure to deposit. So keep in mind, if you're an employer and you don't deposit taxes timely, you don't pay them timely by the quarter due date, and you don't file the tax return, you could be accumulating a whole lot of penalties there, right? And then another one we see, and this is not so much a penalty as a percentage, is the underpayment of estimated taxes. This happens a lot with self-employed people who are required to make estimated tax payments. And it's the interest rate is what you're being charged on. The cost of the interest from the time it was due, that estimated tax payment, when they come back and recalculate it, when it was due until the end of that tax return. So until the tax return is, based on the tax return due date. There's a lot of other penalties as well, but those are the main ones we're covering today. Some strategies that you can use to minimize, well, 25% failure to file timely. File timely, even if you can't pay, file timely. Avoid that 25% payment. You may get an extension to file, but file by that extension due date. What if you can't pay? Well, I would suggest you pay what you can by the due date. That way, there's a penalty and there's interest on less of a dollar amount. And since the interest rate's at 8%, you've got a penalty of 0.5% a month or 6% per year. We're talking about 14% that you're paying on that money that's going to accrue on that money you're not paying. So you pay what you can. Get in an installment agreement for the rest, because when you're in an installment agreement, typically you'll see that failure to pay that 0.5% cut, it's cut in half. So pay what you can by the due date, get in an installment agreement. You're self-employed or you owe estimated tax payments, you're under withheld, make those estimated tax payments so you don't come up with that penalty at the end. And then penalty abatement may be an option. If it's a first-time penalty abatement for the failure to file, failure to pay, failure to deposit, or if you have reasonable cause, it was beyond your control, penalty abatement may be an option. So you may want to look into that with a professional. So hopefully you found this helpful. If you did, please like the video so others will watch it. If you are not a subscriber yet, please subscribe today. Continue to listen to my IRS topics and see if you can find some ways to resolve your taxes by listening to these videos. Have a quick question or comment, please leave it in the comment section below. And if you need professional help, give me a call, 954-715-7285. Free consultation. We'll see if we're a good fit and go from there. Thank you for listening. Have a great day.